All right. Good evening, traders. Good evening. Good evening. You should see my screen, hear my voice, say hello. Let me know if that's all working while I get the rest of this set up. Working, Tom says. Thank you, Tom C. Good evening. Good to see you. Good evening, Doug. We'll give it just a minute to let people struggle in. Hi, Dan. I hope all is well, everybody. All right, let's go. Officially, good evening. Welcome out, everybody, to the Options Income Launchpad Trading Foundations Open Forum. I'm Scott. I'm sure you had a great session with Glenn. As always, what he and I do are for education and illustrative purposes only. Nothing intended as a recommendation to buy or sell any security or financial product. We're not brokers or advisors, and therefore don't give personalized investment advice. Any decisions made based on information you see at this platform, it's done so at your own risk. Yada yada yada. Okay, Glenn, what are we continuing? How many are we expecting? And what was the conversation? Also, are there any lingering questions? Or are we just a basic market discussion? 12-ish traders. Oh, I love trading psychology. Everybody knows that about me. How much I love trading psychology. Dan says I took the C trade. A 130 strike with a 49 delta. Fair. 138 profit target. I'm wondering about why you took the trade at a strike of 140. Well, Dan, your question. I would like you guys to give me like the rundown on the trading psychology. I'd like to further that. I'd like to throw my 2 cents in. I don't even care what it is. I'm going to throw my 2 cents at it. If you don't tell me what it is, I'll just throw 2 cents at nothing and you'd be like, that wasn't really worth 2 cents at all. Let's go through this trade. Let's go through it. So I'm gonna show you exactly how. I was earlier. I was looking at the 135s actually this morning. So I'm gonna go 130. 130, 135, 140. Now, here's the deal. I'm not going to be in this trade beyond. The only way I'm in it past the 12th, no, the 15th. The only way I'm in past the 15th is if it's working. But I'm going to be wrong probably within a week. And if I'm right, then I can kind of look at that later. So the first thing I'm going to do is I'm going to get some parameters in here. Where's my stop? Where's my target? Where's my time frame? Well, here's my target, 138.50. Where's that coming from? Right here. I took this, a good representation of a composite. If it goes fast, maybe I keep a little and let it go. Now that's one element, Dan. I'm going to be able to buy more contracts by going further out of the money, which allows me to then layer it better. So if I can end up with like 5, 6, 7 contracts instead of 2 or 3 contracts because I went deeper or whatever the case may be, that and you know, that's something that I've worked with people on individually as well. Now here's the deal. We bought an out of the money option that would, for all intents and purposes. So Dan, your question makes perfect sense. Believe me, I've explained this before. but it is out of the money for its entirety of the trade. It starts out of the money, it ends out of the money. And people are like, Scott, maybe you haven't heard. People who buy out of the money options end up out of the money. Very clever. And then they say things like, 70% of options expire worthless on expiration day. That's because on expiration day, most people close their options before expiration that are in the money, knowing that if they don't, it's just going to exercise and they're going to buy the stock. And then they're going to have to come back on Monday and mess around with the stock. And it's like, wait, that wasn't what you were trading for. Right. So, and everybody who's out of the money, what are they going to do? Nothing, because it's out of the money. You're going to let it expire worthless. And so, yeah, on expiration day, 70% of the remaining options are worthless and expire, and the other 30 are in the money and get exercised. And at the end of at the evaluation point of this, I'm not asking, why did I buy in the money or out of the money? I'm asking somebody, why'd you stay in all the way until expiration? We're buying Junes that are June 18th, and we're thinking we'll be out of this trade by the 12th, maybe an extra week. That puts us at the 19th. And then we still have an entire month. So I will tell you this, it's okay. And so when I run these numbers on these 3 different trades, what I'm going to do is I'm going to say, let's take a standard unit of risk, $500. Okay. $500. That's how much. So for each of these, and I'm going to start isolating them, they're all working off the same variable. May 12th, wrong at 125.25, right at 138.50, risk, reward. It's all lined up. I'm getting, close to 4-1. I'm getting about 3.8 to 1. Pretty good across the board. Now, 10 contracts. This is what Dan was talking about. You might have heard his comment. He said, I'm getting a 49 delta. Close. Mine says 47, but pretty close. Actually, here it says 47.7, so 47.7 is what that would be. So yeah, basically just under 50 delta. But what I'm going to look at in my evaluation is this number here. That is how much I'm going to lose if I'm wrong. And I'm going to get that standardized. I'm not even going to look at the other one yet. In fact, I'm not going to let anyone look at the other one yet. You might be thinking, Scott, how do you think you're going to accomplish that? Oh, well. How indeed, my friends. Now that you can't see what the profit is going to... Shit. Whoa, there we go. Sorry. Okay. Here we go. Let's get each of these as close to 500 as we can. I think it's going to be about 3 of these. 5, 4, 3. Okay, $540. So now we're thinking, okay, I'm willing to be anywhere between about 500 and 550, maybe even 560, but getting everything as close to this number as possible. Okay, 540 there. I'm going to uncheck. Now I'm going to move to the 135s. That's what we looked at this morning. 1330. It may be 3, it may be 4. Let's see what happens here. Boom, 4. 530. So you can see 540 for 3 contracts at 130. 3 contracts gives me 540. Then I go here and I do this one and I get 4 contracts. And then I go here and I get probably 5. Let's see if that's right. 5. Oh, 6. 6. 3, 4, 6. In the money. No, out. They're all out of the money by different levels. Okay. Now they all have somewhere between $520 and $540 of risk. They're within $20 of each other. I want you to show you something else. Also, is this interesting? I don't want to keep going if everyone's like, Scott, you've done this before. It's a repeat. We're all kind of getting tired of it. Or is this useful as a comparative process? Give me some feedback here. You guys are quiet today. Okay. Useful. Thanks, PJ. Now I want you to look over here. This says, whoops, wrong one. Whoops. There we go. Delta. Now this is the position delta. So Dan, you quoted 0.49. I saw 0.47. Anyway, that's the actual like per share. It has a delta of 0.49 per share. What does that also mean? It means it behaves like 0.49 of a share. If the stock goes up $1, that contract will go up 49 cents. Okay. So we did 40, 49 or 47, let's just say. And then we have 3 contracts. So we got rid of the decimal because we said that's per share. Make it per contract, 49 per contract. Times 3 equals 143. What does this delta column mean? That is how many shares your trade behaves like. You have 3 contracts. It controls 300 shares. It behaves like 143. Like 143. The next contract has 4 contracts and it behaves like 135, a little less, but basically in line. The last one, 132. So they dropped off a little bit to each one. Okay, now let's start to go through these one at a time. Now we've already standardized the risk. We know what this is down here. We don't care too much. Now we're looking here at PL Open. But I also want you to pay attention here. A little bit here. And a little bit through here. So we're going to turn this a little Greek, the Greeks. So delta, we know it's starting around 141, 143. Okay. What does gamma tell me? Gamma tells me how fast delta will change. Gamma is delta's delta. So as it moves from 128 to 138, it goes from 141 to 225. Gamma is telling you the rate at which it moves. Theta says I'm losing $22 a day on this position. I expect when I get to the end of the trade, it's worth my delta is 225. My profit is 1762. Okay. Now we start comparing. And we say, well, what's this one worth? 1786. I actually get an extra $20. Not much. I get an extra $20. Now, what I want you to notice is the theta is a little bigger. I'm losing 25 a day instead of 22. But the gamma is also bigger. It accelerates. So by the end of this trade, my delta is 250 instead of 225. 250 means it's at the end, it's moving faster. So if there's a chance that I could carry one contract and be like, you know what, it could get to 142. And if that happens, that last couple of points could be real profitable. Well, 250 is better than 225. So they're not far. I mean, these are all pretty close. Let's do the next one. 1786, 25, low 10 or 11, 250. Now we go here. Whoa. 1885. I just got an extra $100. Same risk, 530, 520, actually $10 less. And I go from 1786 to 1885. I want you to notice the delta is now 28. That's the highest one yet, 28. But it also has the highest gamma, 13, 17, which means that at the end of the trade, the delta is now almost 300. At the start of the trade, they all behave around 135, 140. At the end of the trade, it's 225, 250, almost 300. So if there's a chance that it moves a little more, and here's the other thing. If I have 3, 4, or 6, it's a lot easier for me to keep 1, possibly 2, but to have something that I could keep, it's a lot easier with 6 to say, you know what, I'm going to sell 2 contracts at the take profit level to ease the pressure. Then I'm going to take 3 of them to the primary target. And if I get there, I'm going to shut that down and I'm going to take 1 contract for a ride. It's very difficult to do that if you only have 3 or 4 contracts. Right? You'd have to go 1, 1, 1. I don't like that breakdown. That's not the priority of how I want to do it. So that, Dan, is a 20-minute explanation as to why I chose the 140s at the end. And it's interesting because when I ran the numbers this morning in the session, we actually landed on the 135s. So I bet there's a bunch of people, you took the 130s, and I actually bet there's a bunch of people who took the 135s before the alert came out. I think we had 20, 25 people this morning. I have to imagine at least 4 or 5 people took the trade prior, in which case they would have ended up at the 135s. Now, if you're at this level of strike price selection, number one, you're in the top 2% of options traders and in the analysis that they conduct. Glenn, do you agree with that statement? Is that too bold? That, you know, this analytical process is not a common thing that a lot of options traders do. Usually an at-the-money guy, which is interesting, Dan. I hear you. And it's funny because this process has led me increasingly to out-of-the-money options. And again, I think there's a lot of bad information out there. There's no way I'm in this trade past May 18th, and I'm only in the trade to May 18th if it's going right. If any of those things aren't happening, this little guy gets shut down. It's liquid. I can get in and out pretty easily. I don't think there's a wrong answer here. There's the difference between a little bit of extra gain, maybe. Yeah, the June 18th is the ones I went with for sure. But right, why I don't need to, then I don't have to mess around with time falling off, starting to accelerate at too fast of a pace. I believe this is what makes sense overall. So that is what I'm gonna, when I pick the strikes. And then if I can't get any of the strikes to work, I'm like, oh man, I can't get above a 2.5 to 1, even though I have a better than 3 to 1 reward to risk ratio on the stock. That usually means the implied volatility is high. The implied volatility is high, and that means that the options are a little too expensive. I don't want to be a buyer of expensive options. I'd rather be a seller, or at least a net seller. So that's when I would say, oh, you know what? Let's do a credit spread and just let's see if it stays above a certain level, or let's do a bull call spread and let's see if it just happens to stay above those levels. Speaking of, let's go look at some things from today. So a nice recovery here. I got to tell you, I was on the fence when I closed mine, but I'm like, I'm going to stick to my rules. I didn't like it. If it stayed anywhere closer to this 389, 390 level, but it just couldn't hang on. And when it closed down here, I'm like, no. And then I'm like, this thing's going to recover. So PJ, still in it. Great recovery today. These are Mays, is that right? May 15th? Is that right? A week and a half? Anyway, yeah, these things move back. There's not even. I bet the profit looks pretty okay right now. Time has decayed. It's moved, and it looks like it's got plenty of momentum to keep going before. So there you go. Giddy up there. Bank of America. As I said, I took a little profit Friday. As it got up into this area through here, stayed with it. A recovery day today. I'm seeing if there may be one of our hiccups. Hiccup happens plenty of times, and we'll see what we can get there. Oh, Vodafone, come on, Vodafone. I'm actually gonna give it. I'm gonna give it one more try. I'm gonna see if it stabilizes and gives me a pre-earnings bounce. No time. I took a little profit already up in this area. I'm trying to remember what the zones were on that one. Give me a second here. Alerts. 1650. Yeah, we didn't get to 1650, but I think I adjusted to 16. I can't remember. Anyone still in VOD? Let me know. But VOD's fine. Bank of America's fine. Applied Materials came back. What else do we have? Oh, well, ASX continuing. This is our second in a row on ASX. We were looking for it, got it out of earnings. That one's looking good. Went with the option this time, looking good. Fabulous, fabulous. CENX. Is that the aluminum stock? I think, is that, I don't think it filled, did it? So remember that one was placed in advance. I don't think that one, let me go take a look at that one. ASX, CENX, entry 6360. 6360. So today it got a high of 6340. So this trade's requirement was to surpass this high to a certain level, and then it would have filled. Additionally, you had your little watch for earnings down here alert. Why was that watch for earnings? Ooh, that's a fun picture. Sailing through the icebergs. Fun. Sorry, my ADD got me. You can see the earnings are now tomorrow after, no, let's see, Thursday. Well, I mean, look, depending, no, look, depending on when you bought it, if you didn't buy it today at the high, it's probably, I mean, did you buy it today or did you buy it earlier than today? Earlier. Well, then it's profitable. And you got one more day, 2 days potentially. Honestly, up 4% today on increased volume. PJ, I say stay with it. What do you think? I think give it 2 more days. If it rolls, close it before earnings. Otherwise, I say ride it for 2 days. I think you may get like a couple pieces out of it before. Look at the last time before earnings. Earnings right here. Last couple of days, bing, bing, bing. Pre-earnings pop, right? Bing, bing, bing. 66.84, and then you close her down. Yeah, let's talk about it in the morning if you're here. So But on some of those alerts that come out first thing in the morning, and I'll make sure I say this again, and maybe we'll even flag it. Those are to be triggered. The ones that come out in the afternoon are likely already triggered, like today's. It was there. We're not waiting for it to close over anything. It already has done what it needed to do. Thank you for flagging that there's a bit of ambiguity around the what's going on. So yeah, look, good spot. Everything looks pretty good right now. I like the new alert that came out. I like the way things are working. I like that we were able to hold on to some trades and that they've recovered for it, and that the posture allows that. Apple overextended, ADM overextended, AMAT. Good recovery for those who stuck through and were patient with this. Well done. Good on you. MKR moving too late. 8% on today. That's most of what you would want. Amazon looks overextended. APH, not yet. ASX, we're in it, looking good. AXP, no. BABA, I did not end up taking BABA. Beep. And I'm glad I didn't. Bank of America, trying. I think I can. BCS, no. Citigroup, yes. Caterpillar, overextended. CF, choppy with earnings. CIN, a little overextended. Coherent, earnings come out tomorrow after market. Cisco, I feel bad. I took this one here. I didn't end up putting the alert out. I should have. Definitely made a good move. Anybody else in that one? I mean, that was certainly one we talked about. And I find these days that there's a lot more instances where people are jumping in trades before knowing that, hey, this may or may not come as an alert, but I like it. But me likes it. Diamonds, here's Dow Chemical. GE sitting at the bottom. Gold made a little bit of a move today, not much. GM maybe sitting on a support level. Google. So Google, we actually were looking at this thinking, is there a chance that's trying to break out of a flag? But you'll notice it really pulled back quite a bit from the high. And when I see a pullback from a high like that, my thought is, certainly no, there's nothing there for us. Goldman Sachs, it maybe if I wasn't already in a couple of financials. Intel overextended. IWM strong, up 1.7 today. Sold some puts. Nice. Good trade. Especially for a stock you may be willing to own. There's Lumentum about to hit earnings. Did they hit earnings? They did. Expecting 181. They got 237. You might think, oh, they crushed it. It's going to be making a big move tomorrow. Nope. It's sitting down at 950. It's down 50 points, which isn't huge. That'd be like if a $95 stock went to, or a $99 stock went to 95. You wouldn't be like, holy shit, what's going on? You'd be like, oh, yeah, it's about 5%. Lam Research, big move today. I feel like, it wasn't a phenomenal trigger through here, but with the market posture where it is, I feel like I again was maybe a little too conservative by not pulling the trigger on this one. Now, of course, it's hindsight. And now that it's moved, we're like, well, yeah, of course we should have done it. But I was looking at that one closely. MasterCard, no. Meta, no. Monster, no. Marvell. Like we said, you could have thought about it, but it seems to be stalling out or triangling. Triangulating? No, you're not triangulating. You're triangling. Morgan Stanley flat. Microsoft, maybe. Micron is a beast. What a beast. What a beast. Netflix. Woo. Oh, they rolled right over there, didn't they? Nvidia trying to stabilize. There's a few who are thinking about a bullish trade coming out of this. Few people thinking about it. Palantir smashed today on earnings, going down even further still after hours. QQQ, bullish day. Rocket Lab, no. Ross Stores, maybe. RTX, no. Silver, no. SanDisk, the memory stocks continue to make astounding gains. Astounding gains. I missed AMD. Let me pull it up. Vladimir, let me pull up AMD. Big one. Earnings just came out today. After market. They wanted 105. They got 137. They smashed it. And what's happening? The stock is looking to gap up 16% tomorrow to 411. A beautiful rise. So the whole is AI gonna? Yeah, it's looking fine. The chips are doing fine. Just fine. Where was I? Tesla. No. Stalling. TSM falling. Maybe. UPS. Oh, those guys got beat up. Viking Cruises holding up. The VIX, we don't know yet. We don't know yet. That's not. You're like, there it is, Scott. There's the higher, there's the lower high. It did this. Boop, boop. Nope. This thing's still turning up. It's got it now. If it were to tomorrow break the low, then I'll be like, yes, I agree with you. If that happens, boom, lower high, break of support. That's likely to get it a half a point bump. And then we're hoping this thing runs down here into the low teens. Oh, wow. Magical things happen then. Different types of trade strategies become viable to us. There's quite a bit of good stuff. What else? Uh, okay. CEVA, Doug says. Give me 1 second, Doug. I'm going to knock out these last couple here. VOD, we talked about WDC and Walmart. Okay. CEVA. Siva Inc. Ooh. Well, yeah, look at that little high flyer. Today seems like a maybe kind of coming into a blow off top. But yeah, That's got some momentum there, doesn't it? I would say, there's still a decent chance of a trade alert. We should have another one coming out this week, I would think, based on the bullishness and that continues. I don't know what the current situation is, but yeah, I over on the straight is what I mean. Apparently things are starting to flow. That's good. Let's hope that it continues, and well, we'll go from there. All right. Anything else before we wrap up tonight? Any other Q&A? We had a guy. I thought it was a great conversation on the trade that came out today. We were able to look at a few trades that were in. Everything's going well. Copen, a little bit of a penny stock here, low price stock. Okay. Earnings coming up, rallied. Now looks like it's maybe a little overextended. There you go. Okay. Well, listen, tomorrow morning, 7:30 a.m. my time, 9:30 a.m. if you're Eastern. Market open. We'll look at the trades that we have on. Let's go take a quick peek at the futures before we wrap it up. Everything's going well. Market's going well. Futures are up even a little bit more. Yeah, giddy up. Bullish markets. Everybody loves them. I hope it lasts as long as possible. Have a great night, everybody. I'll see you in the morning. As always, happy trading.